And so you have to be aware of that volatility in Terra Luna, right? Terra Luna went down by 90% several times. Over here we see a 80% drop just recently, right? Since beginning of the year, we've seen a 50% drop, more than that. So be aware there is a lot of volatility and you want to take advantage of that volatility. You don't have to necessarily sit this out. You can be outside of the market when times are bearish. And the way to determine whether or not the price tends to rise or the price tends to fall, the way to find that out is with this following strategy. Hi, today we're going to discuss a backtest, a simulation of buying and selling the Luna token based on historical data. So we're going to look at what's historically the best way to time the market to get into Terra Luna when prices tend to rise and to be outside of the market and not endure these kind of crazy losses when times are not that bullish, right? So there is a way to time this properly. There is a way to backtest to find out what potentially works the best. And what we are going to look at in this video is one of my favorite technical indicators, also one of the simplest. It's the moving average. And there are two types of moving averages. There's the simple moving average and the exponential moving average. We are going to use both, and we've got a backtest. We've got a simulation that determines what's actually the ideal duration of those moving averages. So what you see over here is the Luna to US dollar price. And in here, we've got now two moving averages. Let's change the styling somewhat. Let's make the simple moving average here in somewhat green, turquoise, something like this. And then for the exponential one, let's change the styling to yellow maybe. And so when we've got such a moving average, right, we want to distill the general momentum, the general trend of the price without all these short-term fluctuations. That's in the end the idea, right? We want to benefit from positive times, but not be in the market when times are bearish. So let's say we take here the 50-day exponential moving average, maybe also the 50-day simple moving average. Those are the two lines we get in addition to the price, right? And the most straightforward way to use these moving averages, right? You could do all kinds of complex things, right? You could buy and sell when these moving averages cross, or when they start to rise, or when they start to fall. You could do these kinds of things. But a more straightforward way is to simply sell whenever the price is below the moving average and to buy whenever the price is above the moving average, right? When we scroll out over here, this is how the price tends to behave, right? When it's bearish, the price is below. When it's bullish, the price is above. And so you can simply do that, right? Especially with the Terra Luna ecosystem with Anchor, one doesn't have to necessarily always be risk on. If we are risk off, if we decide to rather be outside of the market because maybe currently things don't look as bullish, then we can simply earn almost 20% per annum in return. And so does it really make sense when you get that much money when times don't look bullish? Does it really make sense to just buy, hold and forget and then potentially not be that good at forgetting? And imagine you would buy over here and suddenly see just a few days later your balance shrinking by more than 70%, right? Are you really going to be cool and not sell during such periods? That's the big question. And so I think it makes sense to have a strategic, math-based approach to timing the market. And one way is to sell whenever the moving average is above the price. So this is one of the backtests. So this is now with a simple moving average. As said, there are two moving averages here, the simple and the exponential. They're slightly different. Maybe let's first go to that. So an exponential moving average tends to react quicker. So a moving average averages the prices, right? So that's why it's called a moving average. So this point over here, it just takes the average price of whatever happened here before. It adds up all of those prices and divides it by the number of data points we have. So when you've got a 50-day moving average, this point over here is simply the average price in the last 50 days. For the exponential moving average, that's slightly different. We also take all of the last 50 days into account, but we take more weighting to the just recent data. So thus, when the price changes quite rapidly, the exponential moving average reacts faster. So you can see the yellow line, it's closer to the prices, right? It's almost like a shorter duration, simple moving average. So there are slight differences here between the exponential and the simple moving average, and we want to find out what's actually the best and what kind of length should we take here. If we decide to sell whenever the price is below, should we take, for example, the 20-day moving average? Should we take the 30-day? What kind of moving average should we take? Because in the end, this is the main determinant how we currently see the price action. When are we actually going to buy? When are we actually going to sell? In order to find this out, we have to do that simulation of buying and selling. So the best result for the simple moving average trading, the best result is shown over here. So in white, we've got the Terra Luna price, and in green again, we've got our backtesting result based on the simple moving average. The problem with this chart though is that we can't really see what happened here in the early days, right? Because this is a linear scale. We want to actually look at this on a logarithmic scale, as we also do here within TradingView, right? This is a logarithmic scale, so we can actually see what's going on here in the few cents as well as in the several dollar range. Once we toggle this, right, this is how it looks like on a linear scale. So when looking at crypto, you always want to look at logarithmic scales. The great thing about logarithmic scales is that it gives you an idea of how much percentage gains you can make. So a change over here, this kind of a distance, is the same percentage gains as, for example, this kind of a distance. So it gives you ideas of percentage gains, not so much an idea of absolute dollar amounts. So when we look at the backtesting result on a logarithmic scale, this is what we get. So this chart and this chart is the same. The only difference here is this is logarithmic, this is linear. And so this is why the simple moving average trading strategy works so well. When we've got all of this bearish momentum, when the price of Luna goes down, we actually don't lose anything. We even gain a little bit. This depression here has been massive for Terra Luna, as we pointed out, right? This depression here was more than 90%. But during this whole time, just following this simple strategy, we even gained a little bit. Not much, but a little bit. Now, avoiding this bear market is only one of the positive sides of the strategy. The other positive side obviously is the outperformance, right? So not only do we have less risk, as in less pain when times aren't as bullish, right? Look at this crash over here, which happened in March 2021 all the way to May 2021, this 80% drop. This would have been much more muted had we followed that simple moving average. Now here are the results of the exponential moving average. So that's color coded in yellow. That's the result. So the same way as we have color coded yellow here on this chart for the exponential moving average. Now the question is always what actually works better. So this is the same chart on a logarithmic scale. So let's flick this back and forth. This is exponential. This is linear or simple. Simple moving average, exponential. Simple, exponential. Now, what are the durations here? I will show you in 1 second. If you so far enjoy this kind of content, don't forget to subscribe because I publish videos every single day. And of course, a like would be appreciated as well. It will help the algorithm. Thank you. Now let's go to the result. This is the result of backtesting 52 moving averages. So on the x-axis, we've got the duration of the moving average. 1 simply means we look at yesterday's price. 52 means we have the 52 moving average. And now we've got 3 lines over here. First of all, we've got buying and holding or hodling. So this is the black line over here. This is what we would have gotten just buying and forgetting about the Luna token. A bit over 400% per annum. And then again in green, we've got our simple moving average. On the y-axis, we get the annualized return had we traded according to the simple moving average. So this curve here represents the results of 52 different backtests, meaning the best simple moving average in this case is the one over here with a duration of 30 days. And we can see that most of the moving average durations, they outperformed buying and holding. So it doesn't matter too much what duration you actually take, as long as you don't take something very, very short term. You should be okay just following any simple moving average. But the best one is the 30-day. Now, the exponential moving averages also show relatively good returns, especially on the shorter time frames. So if you're inclined to trade a bit more actively and you want to take a duration that's less than 26 days, then potentially use the exponential moving average. The best EMA is the 27-day. So that's how we can get these kinds of performances, how we can protect ourselves from losing money in bear markets, but still participate during bull markets without the large crashes. And so let's plot them. Let's look at this in an interactive chart. So first of all, the 30-day SMA. So here we set 30 for the blue greenish kind of line. And now we are setting 27 for the exponential moving average, for the yellow line. So this is what historically works the best for Terra Luna. Of course, this approach is not perfect, right? Sometimes we've got bad signals, so we buy in and then we sell again for similar prices. We are outside of the market, we buy in again, we sell. So it's not perfect by any means. We do have these bumps where we just short term in the market and then the bull run can actually not really start. But in the grand scheme of things, this is what works. And it's not a coincidence that this works, right? It works for a lot of different durations. This is simply just an optimization for what kind of duration historically worked the best. And so this is what we are looking at, right? One might even argue that this could be interpreted as a support line, right? When we are in a bull market, or as a resistance line when we are in a bear market. Maybe it also makes sense to be somewhat cautious if we only cross this moving average very slightly, as over here. This tends to be not a valid signal, right? Or the same way over here. First we crossed pretty well, so we would buy, but then this failed signal over here we would have sold. You can pretty much ignore this because it's so close to the moving averages. So this is how this strategy goes. It seems to be working pretty well historically. We are outside of the market when the big crashes happen. We are in the market when prices tend to rise. And what's the current levels over here? The exponential moving average is at $81.70 roughly, and the simple moving average is at $77. So that's quite nice, right? We don't have all of these temporary crashes, but we still participate on the upside. Now, why did I decide to backtest the Terra Luna prices? That's because of a request here in our premium membership chat. So that's all it takes. If you need a backtest on a certain altcoin, or if you've got a specific strategy besides the moving averages that you would like to get backtested, feel free to simply join Bitcoin Strategy Premium and request that in the chat. So in case you're wondering, the link is thebitcoinstrategy.com. That's in the video description. There's two ways to sign up for this. One is simply monthly. Currently it's a bit cheaper because we are in a bear market, or alternatively yearly, where you get 2 months for free. Now, besides the chat, there's obviously also way more. So a lot of tutorials on how to do such backtests. There's also a statistics library where you can download all of the data for those backtests. These are simply just Microsoft Excel files. So feel free to download them and modify them using the video tutorials. And there's even a whole course on technical analysis, on backtesting, and of course, last but not least, probably one of the main reasons why people stay subscribed, there are daily market updates. So every day I post a video on how I currently see the crypto markets and what kind of trades I currently do. This is not my first Terra Luna video. You definitely want to watch the video that I've just released, I think last week ago. There's quite a bit of value over there as well. There's relative pricing over there, timing the market as well. See you in that video. Bye bye.